Welcome to the Trading with WebRDD YouTube channel. We are going to analyze today's market the same way we did in previous days, okay? First of all, I would like to check what happened in yesterday's market before we start today's analysis. Yesterday, we were able to enter the market twice, and I got over 300 pips from my first trade. Also, I got another opportunity to enter the market around that fair value gap. First of all, I would like to show you what happened in yesterday's market, as I mentioned in my daily forecast. I was able to enter the market after the breakout of that sell zone. I clearly mentioned it in my yesterday's daily forecast. You can check it again. After the price broke that sell zone, it acted as a buy zone, and you can see the price retested in that situation, especially after creating those bullish candles on the 1 hour chart. After completing that 1 hour candle, I went to the 15-minute chart, and I saw at that time there was a fair value gap available. The price retested that fair value gap during the Asian session, but I did not enter the market until it created that bullish candle on the 15-minute chart. Then we could enter the market, and I was able to place my stop loss around that fair value gap. Okay, then I was expecting the price to reach the Fibonacci retracement, but that didn't happen yesterday. The price pulled back immediately after creating that 1 hour big wick. After seeing this kind of wick, I would not keep the order open longer because that is a clear indicator of a trend change at that time. Then I immediately exited the order. You can see another fair value gap touched around that area. I did not enter at that time, but if you were available, you could enter the market, okay? There was another order that if you were available, could give you around 160 pips from that trade. Therefore, congratulations if you were able to collect that profit. I am now going to delete all these setups and draw new setups according to today's market. These are the old 3 setups we drew yesterday. Now you can see after some pullback, the price is going further up. This is what we were expecting. Some consolidation and pullback needed if the price is going up. In the 4-hour chart, I would like to draw support and resistance, but I can't see any major changes compared to yesterday's market. Therefore, I'm not going to draw any new support or resistance in today's market. But before we do further analysis and draw buy and sell zones, I would like to go to the daily chart and check what has happened so far this week. You can see Monday, Tuesday, and Wednesday, all 3 days are bullish. So last week, you can see 3 consecutive Monday, Tuesday, and Wednesday were bullish, and Thursday was bearish. But today is not showing any pullback or bearish patterns so far. Therefore, we have to wait until later in the day to check what could happen. So far, for buying, there are no signals or signs showing a bearish bias. Anyway, now I am going to the 4-hour chart and drawing our best possible zones that we can expect today. I will not draw any sell zones today because we can't see any major pullback from yesterday. So I'm going to draw my first buy zone around that area. This is the bearish candle we saw yesterday. So this is a big area, but I would like to keep that area the same. I can see another bearish type candle. These are the 2 zones I would like to keep and draw in today's market. Now I am going to the 1-hour chart to refine those areas if possible. There are no bearish candles to reduce that area because you can see that candle is the same as in the 4-hour chart. So I'll keep it the same because this area is not a good place to enter the market. Also, in the second buy zone, I would like to adjust a little bit to that bearish candle in the 1-hour chart. These are the 2 areas I am expecting to enter the market if the price comes down there. You can see it already touched that buy zone and rapidly moved up. And that is a good example to show you how we can enter the market after seeing this kind of bullish 1-hour candle. After seeing this kind of bullish 1-hour candle, we can go to the 15-minute chart to identify any fair value gaps. So you can see there's a small fair value gap available, and it already matched with that bearish wick. That ended before the start of the current candle. So that is a good opportunity to enter the market if this candle ends up bullish. Okay, that is a good chance to enter the market. Forget the next 10 minutes are very important for us to enter the market. If this candle is bullish after the next 10 minutes, then I can enter the market with a buy order. We will check later. So this is a good opportunity to enter the market. You can see in the 1-hour chart, the price was touching last night consecutively with some wicks. That means they are collecting a lot of buy orders around that area. Now it's going further up, and we will check what could happen later today. This is our first order setup. According to that setup, according to that show you, I would like to show you that it already happened, where it's easy to see that the price came down there, then retested and went further up, and also created a 15-minute fair value gap and retested it. That is a great live example showing how to enter the market with a fair value gap after retesting it. Retest and move up, and again it retests. That is a clear indicator of what happened. Testing, moving up, and creating a fair value gap on the 15-minute chart, and now it's going further up. Okay, we can enter the market with that fair value gap and a bullish candle. That's very important. You have to wait for the next several minutes to see whether this candle is bullish or bearish. If it's bullish, you can enter the market immediately after the end of this 15-minute candle. This is our first setup, and it's forming now. Now I would like to draw our second setup. I don't know whether it will happen today or not, but it could happen later this week or next week. You can see another buy zone below the 50 EMA. If the price comes down there, that is another good opportunity to enter the market. This is if the price comes down and collects some liquidity below the 50 EMA on the 1-hour chart, then you can see some fair value gaps with rapid movements on the 15-minute chart after showing a 1-hour bullish candle. Then you can enter the market with the 15-minute chart if there is a fair value gap touching candle. Then your first take profit will be around the 20 EMA, and the second take profit could be the pullback area. These are the two setups that I can expect in today's market. I am not interested in selling this market because it has a strong bullish bias. Also, you can see in the 4-hour chart that our second setup matches perfectly with the 4-hour 20 EMA. Therefore, this could be a very good buy order if it occurs. I don't know whether the price will come down so far, but according to this kind of price action, if it does, you can keep that order open as long as possible for a big profit. That's very important. So I hope you are enjoying my videos. Please compare my previous videos and check what happened, see whether my predictions are working fine or not. And please leave a comment about that. We are using professional trading methods. We are not using a lot of indicators or different strategies. These are professional trading methods. So if you practice these techniques, you can use them every day, every time, in every market. And as it doesn't depend on the market's behavior, you can use it every day and every time. That is the special thing about this kind of price action trading. Okay, thank you very much for watching my videos. If you really like my videos, please subscribe and like. See you tomorrow.